We want to keep talking about currencies, and we're going to introduce Brian Dolan. He wrote a book called Currency for Dummies, and he's the chief currency strategist at Gain Capital Group, who joins us now from Bedminster, New Jersey. Can't think of anyone better to join us. Thanks, Brian.
Good afternoon, Gigi.
What is your outlook for the U.S. dollar right now, first off?
Well, the dollar's been under pressure over the last couple of weeks, but we think it's primarily tied to the reflation trade, and basically the stock market's moving higher, commodities moving higher. It's all putting pressure on the dollar. We think that reflation trade is largely overdone right now. I think the market has priced in a bit too much optimism at the current state, certainly for corporate profitability going ahead. And so we're looking for an asset market, stock market pullback, and then the dollar to rebound from the recent lows.
Okay, also putting pressure on the dollar is the fact that all of the BRIC countries this year have called for the dollar to be replaced as the reserve currency. How likely do you think that is to happen? Is the dollar losing its status as the reserve currency?
It's getting a lot of bad publicity on that subject, and that is certainly hurting the dollar sentiment. But I don't think there's really a viable alternative to the dollar. And you've had a number of countries, China and India in particular, say just as much. So we're going to hear some more rhetoric about this and the potential of a global reserve currency being discussed at the G20 meeting coming up in Pittsburgh. But again, in the near term, over the next, I'd say 5 to 10 years at the minimum, there's really no alternative to the U.S. dollar. And the talk of substituting an SDR for the dollar, basically it replicates what the current situation where central banks have reserve diversification among various key currencies.
And all eyes are, of course, on that G20 meeting in Pittsburgh. What are you expecting to come out of that?
Well, I think they've got a lot of bigger issues on their agenda rather than the currencies. But as far as the FX market is concerned, we expect them to basically stay with the standard rhetoric that currency volatility is not conducive for growth, and that there will be some talk on the sidelines, certainly, about the global reserve currency. We might see a little bit of dollar weakness off of that, but ultimately the G20 is going to be focused on reflating the global economy, indicating to markets that they intend to maintain accommodative policy for an extended period of time.
Now, a huge question, of course, is China opening up its currency. What exactly does that mean, and is that going to cause the dollar to weaken further?
Well, I don't think it's a real viable option yet for China to float its currency. For them to do that, they have to. The Chinese state would have to take its hands off of the economy, take it off the capital controls, and the Chinese government shows absolutely no indication of doing that. In fact, they're, if anything, more proactive these days than anything. And the Chinese yuan stability reflects that. So they're actively engaged in maintaining a relatively weak yuan. So there we're primarily focused on the Chinese growth outlook and what that means for overall global demand.
We really need sort of a setback in the risk markets to bring the dollar back. What are you looking for? What do you need?
Well, we need gold to drop back under about 990. We need the stock market to pull back 5 to 10%. And your telltale signs are going to be a drop in the carry trades, the Aussie yen, the Kiwi yen, and sterling yen, and euro yen. And then for the euro, the key sign that the dollar is coming back will be the euro dropping back under about 144, 145 and a half, 144 and a half to 145.
Okay, Brian Dolan, thank you so much for giving us all of that. All right, very interesting on currency.